Hi everyone, welcome back to Be Rich. Happy Sunday, happy Republic Day. I hope you're doing great. And it's the evening, so I hope you enjoyed your day and you're getting ready. Start all over again tomorrow. It's a Monday. I think it's day 19 to our investment, if I remember right. Day 19 of 247. So those of you who are part of the group will know what I'm talking about when I say day 19. Those of you who do not know what I'm talking about, don't worry, you're not missing out much. But if you'd like to know more about it, go to my Instagram handle and you'll find a group where we have something known as the Tiffin Coffee Group. And you can join there and then you'll get a deeper understanding on what I'm talking about. Today being Sunday evening, I thought market is closed and talk about the prospects of EV. Rupesh said, why don't we talk about EV ETF? Because a lot of you have been asking Rupesh about this ETF and he's been reading the comments. So I thought I'll give him my 2 cents about ETFs because there are many ETFs. Murray Asset has launched an ETF called Nifty EV, a New Age Automotive Index. Right. So what is it? This purpose of this is to track companies which are related and allied to electric vehicles, hybrid and green automotive technologies, batteries and components and raw materials in this. And they're saying 66% of this is exposed. Sectoral exposure is to automobiles and auto components. 14 to 15% is to information technology, IT companies, and around 10% is in chemicals. Kind of makes sense. First, you need the car to be made. Then, of course, there's IT, a lot of software nowadays in these cars, especially EV cars. So that allied industry makes sense being exposed to that. And of course, the battery is the fundamental fulcrum of this whole industry, and that is chemicals. So they've broken it up into those three. And in terms of exposure percentages, it's very clear it's heavily weighted towards the auto sector. The companies which are really the bellwethers in this are the Mahindra, Tata Motors, Maruti Suzuki, Bajaj Auto, Reliance Industries are the ones which are in this group. You can go down and download it and read it. Otherwise, I'll ask Rupesh to put it up on the screen. There's a whole bunch of companies which are there in this. But these are the big ones, the biggies. And what is the valuation metrics right now? The valuation metrics is, right now, the price to earnings ratio for this is at 31, which I think is very expensive. And the price to book is also very high at 5.2. The dividend yield as expected in Indian stocks is rather low at 0.88, which is understandable. There's a nascent industry, and most of these companies in India don't usually like paying out dividends. They take most of their money and they reinvest it in their business. So that's why the dividend yield is so low. Performance 1 year return on this has been very negative. It's around minus 15% right now. Volatility is at 20%. That means significantly price swings are there in the stocks, in this ETF. And the beta correlation is 0.96. That means it's almost pretty much moves in tandem with the Nifty. Beta, if you have heard of this term, you're wondering what it is. It is something to show how these bucket of stocks move to the broader market. So if the beta is less than 1, that means it doesn't swings as much as the market. Let's say the market goes by, beta is 0.8, let's say. That means the market moves up by 10%, then it will move up probably by 8%. And if it drops down by 10%, it will drop down by 8%. So that is if it's less than 1. If it is 1, it moves in tandem. Broader market moves up by 10%. This will also move up by 10%. If the beta, let's say, is higher than 1, then it means it's more volatile. That means, let's say, the market moves up by 10%. This will move up by 15%. If it's 1.5 and the market comes down by 10%, you can expect this to come down by 15%. So this is what beta is for all you newbies who are part of our group who do not know what beta is, and you hear this beta term being thrown around here and there and wondering what it is. There are other terms also. I don't want to get into that right now. We'll do another video another day to talk about those terms. If you're interested, let me know. I'll do that. So what is this? This is the first one, which is focusing purely on EV, they're saying, and it mimics the Nifty EV New Age Automotive Index. And this is the ETF, and most of the allocated fund, of course, will go towards this. Around 0 to 5% of the money provide normal cushion for volatility, it says. So what are the advantages of this? This is what they're saying, the prospectus, of course. While marketing, of course, it includes cars and manufacturers and battery companies, part supplies, technology, the whole, it's very nicely polished up. I'm sure if you want to read it, you can download and read it. But my major thing right now is the pros and cons of it. The thick and short of it is, should you be investing in this? And my issue is where the market is right now. Most of these companies listed, which I'm sure Rupesh should have put the list up or you would have seen it, are very highly priced in the market right now. The price to earnings are very expensive. That means for every rupee you spend and looking for earnings to get one rupee in terms of earnings, the price to earning, if it's 30, you're spending 30 rupees for every 1 rupee you make. So it doesn't make sense spending so much of money when the price to earnings are so high, especially considering two important things. One, the EV industry itself, pretty much like AI, came out with a lot of fanfare. A lot of companies launched EVs, but the adoption of EV, especially in India, has been rather slow. I spoke about it in our group, why I think it's going to take a little longer than initially thought of. And even big companies like Toyota and the Japanese car manufacturers especially are still betting very heavily on hybrids. So it shows you that IC engines aren't disappearing anywhere. And second, the global way it is structured right now, where Trump has come back and he wants to lower oil prices and he wants America to pump more oil out, there's not going to be any immediate rush towards EV because the petrol prices globally also might soften. So this is going to not give the right environment for an EV push. So these two factors are a big thing. And of course, the technology is still developing. It's very nascent, the industry. Nascent meaning it's still very young. It's still trying to figure out and get its feet on the ground. There are lots of talks about different ways to strategize and fix this whole battery issue. Like I said in previous video, Indian consumers are very sensitive to price, one, and two, they like to know their car is resaleable. And this resaleability of the EV car is what is the big question mark, and of course the range of the car. So these things need to be addressed for the Indian consumer, and that confidence needs to build, and that's going to take time. It's not going to happen anytime soon. So if you look at it like that, I would say the future growth potential, yes, it's there globally speaking. Government policies are fluctuating. Some governments which were initially supporting are withdrawing support, saying we've supported it enough, or right now they can't afford to support it anymore, so they're saying all kinds of things to pull out the support. So this is where the long and short of it is for EV cars. And the competition within India itself is been picking up steam. More in the recent car expo, for those of you who are car enthusiasts, you would have seen in the recent car expo, the amount of new cars, companies which have entered the EV field in India, some famous names from outside India have also launching in India. So the competition is spicing up for these Indian companies like Mahindra and Tata Motors. So we have to see how all of them do in this new competition which is also there. So if you're looking at this as a sectorial thing, I would only say keep this in mind. It is highly volatile. It's very expensive. If anything, I would wait for a good correction before I enter this. I'd wait for a good entry point. Like even gold ETF which we're buying, we can see in the last month, it's gone up by 6-7%. You would have been feeling very sore if that same thing was on the negative side. Let's say you bought it at 67 and gold is at 63, you would be feeling rather glum about it. So this is true when it comes to this one, when it's especially so overvalued. There's a good chance you will move into this, buying these units, and you'll see it slowly tickering down and sitting down for some time, and it can be very painful to see that. So I'd say wait for a good entry point if you are very keen on this. Second thing which I would say is keep a long horizon, meaning you're willing to wait for 10 plus years to see this. Meaning you believe that this is the future and you're really sold out to EV, and you feel your children and your grandchildren are going to be all on EV, and EV is the way it's going to be in the future, that you're willing to wait 10 plus years for this. Then maybe you can take a gamble. But remember, this is a gamble. There will be short-term volatility, no question about it, because that's where we are globally, where the FIs are pulling out money. So you're going to see these companies like Reliance, Tatas, Mahindras getting pressured in terms of price. So that will definitely reflect on your EV ETF, and technology adoption, like I said, will be slow. So to see growth in this also is going to take a sweet time. So if you're willing to wait, and you never know what is there in the horizon. No one can predict the future. Today, the way the world we create and consume energy is like this. We need batteries and it's built on this. Tomorrow, where this technology will come, new energy technology comes, we're always in the cusp of something new coming. So with AI and with new kinds of technology in terms of fusion and quantum computers and whatnot, where will this kind of transportation and all this go 15 years from now, 10 years from now, is very difficult to see. When I was younger, we could see technology moving much slower pace. So you had time to adjust in your investments and your portfolio and everything. Nowadays, the speed at which and the acceleration at which we are moving and growing, it's very difficult to say 10-year horizon, what will be there for sure or what. So my thing would be to focus more on the companies than these kind of ETFs, because the risk in these things are there, and being nascent and like all the things which I covered before, you are taking a huge gamble at this point of time. If you've already invested quite a bit in the Indian market and you know what you're doing and you're sure of yourself, then of course, keep all this what I said in mind. I have a personal preference that if I have Tiffin Coffee range, of 2,000 rupees, I'd rather look at these companies individually. When they open up in terms of valuations, I can invest in them. Like Tata Motors is a fabulous price point right now to invest in. I would rather do that than in an ETF such as this. ETFs I would rather stick to when I can't afford those baskets of stock, then I would look at an ETF. So it depends on where you are in terms of your budget too. And mind you, if you're in a budget where this ETF is what you can afford, then I would first say build a solid base, stick to gold, stick to pharma, stick to IT, stick to the Nifty first, build a solid foundation there, then you can venture out into these areas. I'm not saying you cannot do it. If you wish to, you can. Like I said, keep in mind the volatility and the prospect of holding on to this for a long time before you really start seeing massive returns on this ETF especially. I hope you found this video informative and entertaining. Like I said, hope you had a wonderful Republic Day and you're ready to get at it tomorrow. I'll be back again tomorrow with some stock specific news about what's happening in the market by tomorrow evening, as soon as the market closes or during the market. I do hope you take the time to invest in Tiffin Coffee range, like I said. Those of you who have been with me so far, I hope you're happy with what you're seeing in your portfolio. Those of you who are absolutely new to this and who are excited to get started, please keep it in Tiffin Coffee range. Like I've said in previous videos, Tiffin Coffee range is maximum of 2,000 rupees and not more than that. I hear many of you are dropping more than that, and then you're going far beyond Tiffin Coffee and entering even beyond lunch and dinner ranges. Some of you are even throwing house money into it. So be careful when you're trying to do this. Keep all this in mind. My strategy or Anand's strategy only works when you do it in incremental steps over a long period of time, rather than dropping a lot of money at one shot. We're not the channel for you or the people for you if you're trying to do that. Thanks for watching. Be rich, be safe, and see you tomorrow again. Thank you.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it, and please give us comments and feedback on what you read. Thank you.